Welcome to another Thursday afternoon, Hub Nation. I am Tony Jackson, your real money coach today. We're excited about continuing this program. It's amazing that we are now halfway through. This is week number 5. And so we have had some phenomenal responses. Thank you all so much for just letting us know how it's going and what you're thinking and doing your homework assignments and sending those things in. It's been really awesome. And as always, we want to kick the show off by letting you put it in the chat box, your name, the name of your business. And so we want to just always make sure that we're doing that up front, giving you an opportunity to promote what you're doing in your business. And we're so happy to have you on today. It's a pretty awesome experience what we're going through, this whole financial wellness. And again, we're just so thankful for Tammy Hall and Shay and all the people in the Hub office that have been so supportive of what we're doing. And the amazing thing too is that they're doing this because they care about our businesses, me included. We're excuse me, we're a Hub business ourselves, and so that's pretty awesome. But I don't see anyone in the chat box yet. Where you guys at this morning? Come on, put your name of your business, your name in the chat box so we can recognize your businesses. Now, just to recap, where have we been? Initially, we started out, we were talking about financial psychology in terms of there we go. Jamie's in, Tony's there. Thank you for putting your businesses there. Hi, Maureen, Johnson Legacy Travel, Johnson Tours, Charlotte. Great. Harrison Company, LLC Health and Wellness. Danzy, I hope I'm saying that right, consulting and facilitation. Great, we're good to have you. And so we started out with financial psychology, and then we moved on into budgeting. And just to recap real quick, we talked about different things as it relates to budgeting in terms of having a spending plan and things that you could do yourself. Thank you, Tammy. T&M Home Care LLC. Great. And so things that you can do yourself versus things that you can contract out. And we really talked about when you're a new upstart, new business, what things that maybe you are going to do yourself versus things that you would contract out. And so, and then as your business matures, some of those things could shift. Or if we find ourselves like we are now in the middle of this pandemic and things have changed and, maybe the budget's changed, the business projections have changed, maybe you got to go back and do some of those things again. And then the next week we had Mary Nicole Douglas from MND Accounting on, gave us an update on things like the PPP, Payment Protection Plan, the Special Disaster Loan Relief, and some of those things. And really, we're talking about loans and debt. And we're talking about what is good debt versus what is bad debt. We talked about different types of business debt, how to fund your business, and all those types of things. And then we talked about how to get out of debt. And a big part of that is, do you use the avalanche method where you take the highest interest rate debt and you pay that down? Or do you take the smallest debt that you have and you pay that down? Thank you, Karen, for shouting out your business. And so, if you've started using one of those methods to pay down your debt, let us know. Put that in the chat box. Are you using the avalanche? Are you using the snowball? And how's it working for you? And because ultimately, when we think of debt, and we want to really strive to be debt-free, we want to be properly leveraged in our businesses and also in our personal lives. And then lastly, our topic was your credit profile. So we talked about the things that make up your credit profile, the 3 major credit bureaus on the personal side. Thank you, Heidi, with Carroll Communications. And so we were talking about the debt. We're talking about or credit. So we're talking about how the credit works. And then we even talked a little bit about business credit, Dun & Bradstreet, and having a proper score. And how to raise your score. And then there's different ways there to also build your business credit. And so really those first 4 weeks were what we talk about being in a defensive posture. These are just the basics. These are the foundations. Like, again, my thoughts when it comes to money, having a spending plan, making sure I'm not overextended in terms of my debts, and then the credit profile. Now today we're gonna shift and we're gonna talk about risk management and insurance. And really for me, this is a transitional lesson, because obviously when we talk about risk management, that's also still defensive. How do I properly manage my risk? We're going to talk a little bit about insurance. We're going to talk about some of those types of things. Thank you, Jennifer, for shouting out your business as well. And so what we're going to do today is, as we talk about risk management, we're also going to focus on insurance. And we're going to really talk about how we can take some of these things, like insurance products and like different things, and really shift those to being offensive. And so as we finish out the course, we're going to be talking today, like I said, risk management and insurance. Next week, we're going to be talking about retirement. Then we're going to move into investments and even touch a little bit on real estate. And then the final week, we're going to talk about entrepreneurship. And which we know when we get there, we're going to be, as they say, talking to the choir, because all of you are entrepreneurs, or most of you are entrepreneurs, whether you're a single business, whether you're doing this as a part-time extra income, or if you're a full-fledged business with employees. Janine Frazier, thank you for shouting out your business as well. And so we love that. I love when people are shouting out their businesses and just letting us know what you're doing. So today we're going to talk about risk management. And so right now we're going to jump right into it and talk about the 4 different ways to manage risk. And so really, when we think about risk management, there's really 4 ways that we can handle, 4 real strategies for doing that. And the first is risk retention. And when we think about risk retention, that means that we are going to retain all of the risk. So, and I use the analogy a lot. That's like driving your car with no insurance, right? So all the risk is completely on you. We don't recommend you do that. I'm sure that there's an insurance agent on here. If you are, put your information in there. But so we're going to talk, that's like driving your car without an insurance. You're retaining all of the risk. Thank you, Kathleen, for putting Platinum Care Transportation. So now you're taking on all of the risk. The other is risk avoidance. That's taking no risk. And if we were using my car analogy, that would be like never driving the car. That would be like leaving it in the garage all the time. And so risk retention is kind of like, I'm gonna take all the risk. Risk avoidance is I'm not gonna take any risk at all. And I kind of have a feeling that most of us take some risk. There was probably a risk in starting your own business. There's obviously, we just don't, there's risk in leaving our job. There's risk in investing our time, talent, and treasure in this dream that we have, this enterprise, this business. And so there's some risk there. And so I have a feeling that you don't avoid risk altogether. So again, the second risk management style is just risk avoidance. And then we move to risk reduction. Now, risk reduction is when you're taking measurable things, you're doing measurable things to manage the risk. And so, for example, if I'm using the car analogy again, I'm saying that I'm going to have car insurance. And so because I have car insurance, I'm reducing my risk. And so now, and then the other thing is I use the example of how you drive. And so if I'm driving my car and I follow the laws, I drive the speed limit, I drive carefully, that's risk reduction. Now, if I have car insurance, I go out there and I'm driving fast, that's not really risk reduction. That's our fourth category, is risk sharing. So really, insurance in its purest form is risk sharing. And so you pay a premium, and for that premium, you have a deductible. So now if I end up in a car crash, I have shared that risk with whatever car insurance I'm have my policy with. And so that's where we do. So thank you, Carolyn, for shouting out your business. And so here we go. So now I'm risk sharing. And the larger my deductible or co-pays, the more in that risk I share. And this is really how it works through, whether we're talking car insurance or we're talking health insurance or property casualty insurance. Think about the different types of insurances that you need as a business owner. So we need liability insurance. We need, many times we need professional liability insurance. We call it E&O in my particular business, errors and omission insurance. You got malpractice insurance. You got a lot of different insurances. If you have a garage, you might have a garage keeper's insurance, where it pays while you're having someone else's car in your possession. So there's a lot of different insurances that we do. And that's one of the things that's always interesting, is when we go back and we look at our budget and our spending plan, and we look at how much of our budget actually goes towards insurance, because we really need to manage and share in that risk. And that's what the insurance company's in the business of doing. They have actuarials that go and they figure out exactly how much risk and what that cost of that risk is. And so again, risk retention, you're making the investment. So you're covering all of it. That's almost like being self-insured. Risk avoidance, you just avoid it altogether. And then again, risk reduction is you take measures to limit your risk, by having, and that's what a lot of the OSHA and all those type of rules in our workplaces is designed to minimize the risk. And then risk sharing, again, is where we're pooling. And again, in insurance in its purest form is the pooling of risk together. And so if I'm a policyholder and you're a policyholder, we have other policyholders there, we're all pooling our monies together. We're buying insurance. The insurance company is facilitating that, and we all kind of share the risk. And so those are our four strategies when it comes to risk management. And now we want to get into a little bit of the different types of insurance. I kind of alluded to that a little bit. And what I want to do is ask you guys who are business owners, tell me put in the chat box, some of the types of insurance that you carry as a business owner. What are some of the types of insurance as a business owner that you have to carry? So let's see, who's got one? Someone's paid their insurance premium probably this week. Anybody? All right. Okay, let's talk about it. Liability insurance. Liability insurance really protects you in the event that you're sued, or that you're liable for damage to someone else. And so liability insurance, when I talked about as a business owner having malpractice insurance as a doctor, that's a form of liability insurance. Garage keepers liability, that's a form of liability insurance. All right, here we go. We got some here. E&O insurance, professional liability. Again, E&O insurance is one of those insurances in the insurance industry that we have in case there's an error. So you have errors and omission, you have professional liability, even like our hairdressers, beauticians, they have to have liability insurance. And Sam put it in, I own a business, a cleaning business, so I have to be bonded. And bonding is, again, a type of liability insurance where you have what you basically are having a bond. And what that says to the businesses that you're going in is that you can be trusted. You can be trusted. And if something comes up missing, something comes up broken, if you don't cover it, there's this bond that's there to help recover, to bring the damaged person whole. VitaLink listed some very important things. Workers' comp insurance. Workers' comp insurance is very important because, again, if you have employees and someone's hurt, then what happens is that workers' comp now covers their wages for them being hurt on the job. And so workers' comp insurance is huge. And, you know, one of the things I want to tell you is oftentimes if you're having someone else come into your business and they're performing a certain job, there's nothing wrong with asking them to provide you a workers' comp certificate so that you know that those employees are covered. All right. And so now we got a couple others. Again, Tony said professional liability. And here's one, key man insurance. And that's a form of life insurance. We'll talk about that. We got cyber insurance, driver liability insurance. Now, again, most of those are all liability type insurances. So again, driver's liability. So if there's an accident due to a car or carrying someone, then there's liability. Then property insurance. Let's talk about property insurance real quick. Property insurance has to do with exactly what it says, covering property. So if I have a building, then I have insurance on that building. So if the building burns down, the building's damaged in a hurricane, the building's damaged in some kind of way, then I have property insurance to help repair the building. So that's where we have our property liability. And, you know, another thing that we don't think about often is, let me talk to our at-home businesses. People that are running a business out of their home. You need homeowners, you need an endorsement on your homeowner's policy to cover your business property. Because most of the time in your homeowner's insurance, there's some limits to how much of that they cover. So yeah, and here, as William says, we have property product liability products. Again, that liability covered so that if that product causes someone to have some type of adverse effect, that you have coverage there. So property insurance, again, would be your car, the physical damage to your car. And when we use a car as a great example, within a car, you have different types of liability. You have different types of insurance. You have the property liability, which is on the car itself. And then you have property damage liability, which is liability that maybe you caused to someone else's property. And then we also even have health coverage under there. And that's another one of the insurance that we want to talk about is health insurance. Health insurance and for small businesses and large businesses too is a tremendously, it's a big ticket item, let me put it that way. And so carrying proper health insurance for yourself, for your employees, and those types of things is so important because, especially now, because that makes you competitive, in terms of retaining and getting the right people in your business, having that. And it's also one of those things as a business owner, when you decide that you're going to leave your 9-to-5 job, your day job, or whatever you happen to call it, and now you're going to go out on your own, is you have to look at health insurance. How am I going to handle my health insurance? Now, we're very fortunate that we have what is known as the Obamacare, because it will help us get coverage when we have pre-existing conditions and all those types of things. And there's always this debate over healthcare, and it's been for years and years. It preceded Obama, and today is what elements of the health insurance should be controlled by the government. What elements do they need to ensure that are part of that? Accessibility to good health insurance, the affordability of good health insurance, prescription coverages, and all those types of things. And then the last category I want to talk about is life insurance. Life insurance, again, is one of those things that is very, very important in its purest form. And we're going to kind of start unpacking some of these things each week. I'm going to do a part of a presentation that I normally do with my clients. But life insurance is so much more than just burial. Most people think of life insurance as, hey, listen, I had this policy, I buy this policy, and then when I die, it's going to pay a death benefit. And in its purest form, that's what it does. But there's a whole lot of other things that you can do with life insurance. And when we think about it just from a business standpoint, Shay put key man insurance. Key person insurance is very important. What is key person insurance? Key person insurance is when you have a key person in that business that if they were not there due to a loss or something, they died unexpectedly, it would be a financial detriment to the business. And it is used a lot in corporate America. One of our great friends, Eugene Mitchell, talks about it when he was at his company. They put a $2 million life insurance policy on him. And they said, listen, if something happens to you, then we got to go out and we got to replace you. And that's going to cost us some money. We've seen it a lot in even churches, nonprofits, where there's a significant leader in that business, in this case, a church, and there's a key person policy on them. So if anything ever happens, that's there. And so you have key person. The other business use for life insurance is a concept we call buy-sell agreements. And buy-sell agreements happen is if you are partners with someone and that person dies, the life insurance policy provides a benefit so that the other partners buy the family out of the deceased partner. And so it's very important, even in rental properties. If you own rental properties with someone and you and your best friend, you own this property together, and if something happens to that best friend, you now are in business with their family. And so you used to do business with Keith, now you're doing business with Keith Jr., right? Junebug. And so a buy-sell agreement, even in those situations, will allow you to have the money to buy out the other person's family. And so that's another real key. And then there's even more complex things we call split dollar arrangements. And that's where really you can use some bonus systems, you can use some leverage to actually use life insurance as a retirement tool. And it's also can be used as an executive bonus. So executive bonus is, instead of giving this bonus to my executive or my employee, we call it executive bonus, but it could be anyone. So instead of me giving them this bonus, I actually take that money and I put it into a life insurance policy that then allows them to have tax-free withdrawals later. And also if something happens to them, there's a death benefit that goes to the beneficiary of that person's family. And it just gives them another sense of stability and financial security. So those are a few of the business uses. And we're going to bring on my good buddy, Marlon Smith, here in a minute. And, we can kind of unpack some of these things. Marlon, how you doing today?
Hey, I'm doing great, Tony. Thank you so much, man. Wow. I mean, this insurance thing, the funny thing about insurance, it's like, boy, you're paying these premiums and then all of a sudden you're like, man, but isn't it true? I better have it and not need it than to need it and not have it, right? And so, you really brought up some great things. I mean, that key man insurance, and I think we have to start thinking about the value of ourselves as well as our staff. And, it's just so important, man, because again, this is the type of thing where when you have a strong foundation, when the winds come, the storms come, and they will, as we all know,
right.
If there is a death, right? If there is an accident, a health issue where somebody can no longer perform their duties, now at least it's not, it won't just take you under, right? And now we have some funds that can, so I want to say thank you for sharing that.
And, one of the things too, you just brought up there, Marlon, that's very important is disability insurance. Disability insurance is different than health insurance. Right. Disability insurance actually replaces your income when you can't work.
Yeah.
And so there's short-term disability, there's long-term disability. And so that disability piece is very important because now if you can't work, and a lot of times as self-employed people, we don't think about having disability insurance for ourselves.
Right.
Normally our employers provide that, but what if you can't go to work? What if you can't do your job? It's about having something to replace that.
Yeah. And so, I would love to ask a question, with what you've shared so far, this phenomenal opening session, Tony, for our viewers, do you feel, based on what Tony has shared, do you feel like your insurance, do you feel that you are covered? Do you feel like, you have enough, I say type yes or no, right?
Yeah. Are you adequately insured?
Yeah.
And we hear these terms of, I'm insurance poor. And all that. And so we do believe, making wise decisions about your insurance and not just everything. So it is important that you make sure that you're adequately covered, but you want to also make sure that you're not, over the top.
Right. So again, I invite you to go ahead, just write yes or no. Again, one of the things I love about Hub Nation, I think that's a term that Tony coined, is that, it's one of those things where we be real. We take off the mask. We're entrepreneurs, we're business owners, we're aspiring, leaders going higher. But it's so important that we can really just, be honest, right? I mean, and again, what I love about Hub and Director, Tammy Hall and her team, Shay, and the whole team is that they understand, again, the importance of sharing this type of information. Because storms will come, right? No one expected COVID-19. And for those businesses that were ready, right, had their paperwork, had, things lined up, boom, they just, took a little blip, but they kept on moving. Whereas I think it was am I correct, Tony, that our friend, Dr. Dennis Kimbrough, author of Think and Grow Rich, last Saturday, when he talked, to the chambers, throughout the United States, I believe he said, was it 37% of African-American businesses, will not be able to return as a result of COVID?
Yeah, it was a staggering number, but it was more than a third of his research showed that there was more than a third of African-American businesses that will not survive the COVID-19. And, the last report that I saw from the House Governmental Accountability Office, they were expecting really 10 years to recover from this.
Wow.
Not just, you're not just talking stocks, you're not just talking about the S&P 500 and those type of things, but you're talking about just a complete recovery from this. And when you look at all the money that's been interjected in the economy by the government, and we needed that, right? I mean, it was important for our small businesses to have PPP and to have these resources, right, so that we can survive. But many of them are not going to get a chance to take advantage of it because of maybe they didn't have those things done up front, like we talked about. Like having proper, tax records, having proper records. So, in all kind of circles, it all works together. It's a holistic approach to the whole thing.
Yeah. And I want to say thank you. I see San said, I need to reassess, based on the question that we put out there. Jamie said, unfortunately, no. Right. Tammy said, I need more. Peter and Maureen Johnson said, we could use more. Tony said, after listening to you guys, no.
With that one, right?
Right. And Kathleen said yes. So again, this is really great because again, we're sharing information so that we can take action. One of the things I believe about these Thursday, 12 noon lunch and learn, these are like huddles. But in your workbook, you can go into the deep dive. And again, what we're calling you to do is take action. You get the recap email with the video, the activity assignment. And please, many of you have been sending that into us, so we can correspond. Some of you have had additional questions, and we're here to serve. So again, I want to encourage you to, be intentional. And I thank you, Karen. Karen said, yes, I need more. So, Tony, let's talk about the next phase, man. I mean, I'm really excited.
And I wanted to remind everyone that this is all in your workbook, starting on page 82. What are my risks? How do I manage them? And I just want to also, because we're talking about risk sharing, and I'm one that believes this, that I believe that you can share in that with your deductibles. And so if you're looking at, especially, we're going into the fourth quarter of the year. Most businesses, the majority of businesses, not nonprofits, but for-profit business, this is the time when we start to reevaluate our benefit package, and just take a look at the copays, the deductibles, and see if there's some things that you could do there, because I do think it's an important time. You've made it through, you made it, we're 3/4 of the way through 2020. Never thought we'd been, where we were for the last 6 months due to COVID-19, but it's a good time to just reevaluate, what are you offering? What are you offering to your employees? And what I find most of the time is that where we're more educated, we can make better decisions. And that's what we're all about, is just making and giving you tools to make better decisions. And so now we're going to roll into the next phase today, which is really going to talk real quick about estate planning. And there's one slide in particular that I want Chris to pull up, and it's the one with the circles all around it. Because when we start thinking about estate planning, there's a lot of different things. From a business owner standpoint, you may look at this as a continuation plan. Do you have a business continuation plan? On a personal side, do you have an estate plan? What are some of the elements of a proper estate plan? Number one is do you have a will? That's the basic, right? A will actually tells the court what to do with your stuff. And if you have a business and you're a sole proprietor, or you're LLC, or maybe you're a partnership, what happens? What do you want to happen to your equity in that business? And so a will becomes even more important as a business owner. It's important for everyone, but for us who are business owners, it's even more important. And then a power of attorney. And we often think about power of attorney in terms of power of attorney. We think of it in terms of with us personally, but who's going to make business decisions for your business if you can't? If you are incapacitated, or maybe something happens, where's the power of attorney? Who's going to make those decisions? And then certainly on a personal level, medical directives in terms of who's going to be making those decisions. And it's a matter of, sometimes we're talking about, do I want to be on a respirator? Do I want, what are my medical directives? And if we leave it up to the family, sometimes, there's disagreement. Some people think you want one thing, some people think you want another. Beneficiary directives, again, that's very important. And many of our things, our bank accounts, our life insurance, our different things that we name beneficiaries, and what do you want to have happen? And then as we move around this circle, we talk about trust, talking about living trust. We talk about irrevocable trust. Is your ownership in the business, is it in a trust? Do you put it in a trust? Those are all things that a great estate attorney could unpack for you. But we really have to think about these things and how to protect ourselves from the spin down of medical medical bills. So, for example, if anyone ever needed assisted living or those type of things, those could be very tough situations. And really, you have to get rid of all your assets in order to really, help someone or to get help from the government. And so, how do you protect your business so that it doesn't get caught in the spend down process if you personally need that type of medical care? And then life insurance, that's a big part of the estate planning too. We know that 60% of generational wealth is handed down by some tactical placement of life insurance. A great book is What Would the Rockefellers Do? And how do you utilize this to leverage and leave greater legacy? And then here's the thing, organized records. Marla, I can't tell you the number of times I've been to a person's individual house and we're going to have a discussion. We're going to have a discussion about these things. And I asked them about life insurance, or I asked them about their will. And I asked them, well, go get it. Let's review it. I don't know where it's at.
Right.
And I always say, listen, if you're living and you can't find your will, you can't find your life insurance policies, you can't find your power of attorney, you can't find these things when you're living, what is your family going to do when you're gone?
Right.
How are you going to find it then, right? And so it's very important that we have accurate records and that we keep those things up to date.
And let our inner circle know where are the documents, right? I think that's the other thing, so that if something was to happen to you, you need to have that conversation. I personally have, my information, with those who I trust, and they have copies. So it's already clear, right? And one of the things I wanted to say, Tony, Jennifer Robertson said, I have individual life insurance policies for myself, but I am going to look into life insurance policies for myself and my employees. I have researched health insurance, but was not beneficial. But I'm so grateful that Jennifer is looking at, this life insurance for her employees, because again, that's something that we work with businesses to do. And, that is very strategic, very strategic. So, go ahead, Tony.
Yeah, well, and I want to talk about that little piece about the health insurance too. And it depends on the size of Jennifer's business. So what I see a lot of small businesses doing, especially, 50 and under, what they're doing is allowing their employees to go get the insurance on the health market. And then, they cover it, or they cover a portion of it or something like that, rather than going and getting a group plan. Because oftentimes, if it's a small business, they may be able to do better on the individual health market, the marketplace, than they would with a group plan. So those are great things. And like I said, she's at that time, she's looking into those things. And I imagine many of us business owners are now taking a look at that.
Yes. So
we're talking, and I just wanted to mention this. I went over the things pretty quick in terms of, dual power of attorney. We talked about medical directives. We talked about beneficiary directives. And, we have a great little chart. I want to just kind of go over that real quick, and then we can start to unpack a few other things. So this chart actually gives us a couple, it emphasizes, first, if we could pull that one up, it's again has multicolors in it, but what it does, it emphasizes the importance of needing it. And so we have a cluster on one part of it that shows a checking account, assets, combined estate, child one, child two, and how that all would look. The problem comes in when everything now takes place is, how are you going to divide those assets up? How is, if you want one child to get a certain amount, another child to get another, and especially when we have blended families. And so when we're looking at things and it's all straightforward, it works real smooth. But when you start to blend in partners, you start to bring in blended families, now you bring in grandkids or stepkids and all those type of things. That's when the water gets muddy, as they say. And so that's where, even with having beneficiaries named on those accounts, that's not enough planning to really take things and do things the way we really need them to happen. So, and again, that's where we suggest making sure that you talk to a estate planning attorney, especially again if you're a business owner, and so we can start to unpack those types of things.
And one of the things I want to say with that, please, I see Jennifer has responded. She says there's only 3 of us, so I make it up to them in salary. And that's beautiful, because every business owner on this, financial wellness for entrepreneurs, we're at different places. And what we would love to do, all those, we have estate planners, that we have connections to, that we vetted. So any way that we can be a resource, I want to encourage you. You can send an email to info@therealmoneycoach.com so that we can at least have a follow-up with you. For all the people that said, San said, I need to reassess as far as insurance. Jamie said, unfortunately, no. Tammy said, I need more, right? Peter and Maureen said, could use more. Tony said, after listening to you guys, not. And so the reason I bring that up is because, listen, we're not just sharing information. We're also sharing information with the intention of saying, let's move the needle. And that comes with the conversation, a discussion. One of the things that we've connected with Hub is, we just want to be a value added resource. From the responses so far, this is week number 5. And already people have really enjoyed these financial wellness for entrepreneurs sessions. And many of you have reached out to us, and we've done some, some consults and coaching, if you would, just answering more questions. So I want to again put that out there. Please do not feel like you have to do this by yourself, because it can be overwhelming, right? And, there's always new products coming out and so on and so forth. And I believe there's nothing wrong with having a third party look at your situation, right? I mean, there's nothing wrong with that. I mean, to me, that's being astute. That's being, really in present mode, because things change. And so we want to just share with you, because again, I'll say this, and I'll let Tony continue. For me, it's about, let me do what I do the best, just like you business owners. If we stay in our lane and we do what we do the best, and then we connect with others to do the rest, that's being efficient, because we cannot wear all the hats and still grow to the full potential that we have.
But the good news is that we got everything that we need. I believe that if, and I don't know if you guys know this, but you can actually go to the North Carolina website and you can find vendors, Hub vendors. There's a whole portal there that you can go and you can search out businesses. And so I think it's just so important, as Marlon's talking about, because we're not experts in everything, right? We're kind of performing as this general practitioner right now. And so, but as you come, and we can just sometimes just encourage you. I mean, I think someone put that we've been encouraging. So that's what really we want to do. We want to encourage you and motivate you, give you some material, give you some things that you can now go and work with.
Right.
And so as we wind down these next couple of weeks, I just want to share just a couple things from what we do in terms of what we encourage. And we want everyone just to kind of just be thinking. The whole point of this is to start the thought process, and especially as we wind down. So, one of our things that we're big on is creating financial security. So we want to create financial security, and there's really 4 pillars that we believe are as important for creating that financial security. And what I'm sharing with you is something you can talk to your own agent about. Certainly you can reach out to us if you have questions, but how do I create financial security in this environment? And we know as a business owner, sometimes it's up and down. And so that's what we're going to do. I don't know, Chris, can we bring that up there we go. So we want to create a financial security. And there's really 4 pillars that we're going to really unpack over the next 3 weeks that we do that. As one is stock market protection. So we're going to be talking about investments. We're going to be talking about how to diversify, and we're going to talk about risk. And what we really want you to do is just know what the risks are and be able to properly take the risk that you're comfortable with. We have different strategies that help maximize gains, minimize losses, but really risk is really becomes a very personal thing. So when you're talking to your stockbroker or you're talking to your advisor, you can talk about what kind of risk, especially as we're approaching fourth quarter when you're making those decisions about 401ks, 403bs, and different things of that nature. And then income tax protection. And again, income taxes is such an important part of what we do. So we want to just give you tools and things to think about when it comes to income tax. And, we're talking a little bit about that. One of the modules that's not actually in here is government influences. And certainly taxes is a big one there. And then we have medical cost protection. That's some of the things that we're talking about even today when we're talking about the insurance, but understanding that 40% of foreclosures were due to some type of medical crisis, and then 60% of bankruptcies. And so how do we protect ourselves from the major medical things? And then of course, legacy protection. I think many of us as business owners, ideally, what would happen for me is that one of my 4 children would one day take on what we do, would take on the business. I don't know if that's going to happen, but that's the type of legacy, and what kind of legacy are we leaving, and those type of things. So these are some of the things that we want you to start thinking about as we continue to unpack them. And we talk about stocks, bonds, and understanding that, and we're going to unpack some of this. Like, you got high returns, you got high risk. On the other end, bank accounts, you got low risk but low return. There's a concept in the middle called fixed index strategy. So what is the best strategy for you? And so when you're going into this fourth quarter, you start making those decisions, you can know what to look for. And always we look at things from a historical perspective. Okay. So S&P 500, the 500 largest publicly traded companies. Again, this is a 20-year look at what has happened. Early 2000s, we know the market was going down for 3 years in a row, came back, then 2008 happened. Been on a great run since then. 2018 was a negative year, but this year came along. And then we got to think about, okay, how long does it take to recover from those types of things? And then of course, all that was before COVID-19 came along. And so there's a lot of different things that we need to unpack. And so we just want you to just start to be thinking about those things. And then the concept that we talk about all the time is this indexing strategy that may be right for some people. And what it does, it allows you to, take advantage of the market when it goes up, but be protected when the market goes down. Now, all these things are not for everyone, but it is a way to manage your risk. And because the one thing that we're going to encourage you to do over these next few weeks is to always make sure that you're planning for retirement and you're doing some of those types of things that you need to be doing as we move further into the future. So those are some of the things we're going to start unpacking over the next couple of weeks, but we want you just to really be thinking about your future, because now, again, we're going on the offense. Now we're saying, hey, listen, I know what I need to do to get my loans, my credit, my budget. Now, what do I do to prepare for my future? 70% of small business owners have no retirement plan in place. And I understand why, because you're busy working on your business. And I'll just share my personal story. My wife had to get after me because I didn't have enough life insurance. She's like, hey, listen, I'm sitting here seeing you protect all these other people. But what about your own family, right? Because I'm so busy working with clients that I was neglecting doing some of the things I need to do. And I fixed that right away. But, you're busy doing what you do. You're busy running your business, growing your business, starting your business, all the things, dealing with the environmental issues, dealing with the economic issues. And sometimes those are the things that we forget to do. And so what we don't want to do is we don't want to end up way down the road ready to retire, and now it's too late. So that's some of the stuff we want to share.
Thank you, Tony. That was powerful. And, I think the thing is for all of us to really understand, I love what Student Career Path Planning Program, they said, shoemaker kids don't have no shoes, right? And so that's real. Sometimes we're out here saving everybody, and yet, we don't have, what we're supposed to be, taking at home first, right? And so one of the things I want to share with you, I want to share with everybody, here's something that really touches me. And this is just a little visual. I'm a visual guy. So it says, die too soon, become ill, live too long. And what I'm saying when I say that is that basically with what Tony talked about and what we talked about earlier, I love the fact that, Jamie said, when I talked about the statistics of how many businesses aren't recovering, they're gone as a result of COVID. And she said, what a heartbreaking statistic. And that's real. But again, going back to this, one of three things are going to happen to each one of us. Either we're going to die too soon, become ill, or live too long. And my question to you, when we talk about insurance and risk management, we're really talking about you being able to have a solution to each of these, right? Let's just talk about it. Die too soon, right? What we're talking about there is, do you understand that most people really are a little concerned? They say the number one fear, of people is, if we were to die, what would happen next for our family? And that's real. Die too soon. I know in COVID-19, I had literally 3 classmates, 2 college classmates, 1 high school classmate die this year within 12 days of each other. And 2 of my brothers passed away in 2009. And so die too soon. This is real talk. And so, that's one thing we need to look at. Live too long. The number one fear of most retirees is outliving their money. And so what I'm sharing is that, again, when we talk about just being protected all the way around, that's so important. And then the last one was what? Become ill. Become ill. And what am I talking about there? I'm talking about, did you know that the number one reason for foreclosures, I think 44% of foreclosures and 60% of all bankruptcies are caused by unpaid medical bills. So again, this is something that's very important. So, just type in the chat box, do you feel like you're covered when it comes down to these 3 issues? Because life happens. Each one of us, one of these 3 is going to happen. Die too early, live too long, or get ill. And so are you ready right now? I mean, and again, I had to say to myself, I wasn't prepared for those 3 areas, but now I've gotten prepared. And so that's what is very important, as we talk about what we're doing, is really talking about each one of us understanding that, it starts today. It starts today. So type in the chat box, do you feel you're ready, or which of those 3 areas maybe you need help with, so we can customize, upcoming, our sessions, because again, we're here to add value, real life value. The playbook is phenomenal, but again, we want to customize every session. And many of you have reached out to us and we've had follow-ups with you. But, when it comes down to die too early, live too long, or get sick, is there anything, do you feel like you're covered? You can type yes or no. Or is there any particular, subject that you want us to focus on? Because again, we want to make sure that we add value to you. And so I appreciate it. Tony said no. Tammy said no, not prepared for either one. Wow. Thank you. Thank you for being honest. And so again, if we can be of assistance, please let us at least have a complimentary, no obligation, just a session. We can do it over Zoom. We could do it over a conference call, whatever you feel comfortable with. But I'm telling you this, we have to now take action, because I don't know if it's going to be COVID-19 or COVID-21, or if it's going to be a real estate or stock market or a war that breaks out. But what I know is that we need to have learned lessons. They say the definition of insanity is doing the same thing over and over, expecting different results. And so to me, that's really what it's about. And I love this, San said, I am covered, but need to work on a will or estate. Thank you, San. Thank you for being honest, and that's great. So let us, again, you don't have to do anything. We're just here to be a resource. One thing that, Hub, we said, look, we want to add value. And so it's not just these sessions, it's also us saying, hey, how can we share our resources that we vetted, You know, I mean, we bring the cream de la cream. So I say send an email to info@therealmoneycoach.com and you just let us know. And everything's confidential. Again, there's no obligation. It is free. But again, we understand the value. One thing I can tell you in working, you know, I've traveled to 45 states, 18 countries. And one of the things I've come to realize is that really high achievers, people that are really taking it to the next level, they understand the value. They understand the value of mastermind. They understand the value of mentorship. They understand the value of synergy. And that is, to me, the differentiator. Those of us that are looking to be, and all of you, I mean, for all of us that are here, it says a lot about you. For you to take out a lunchtime, you know, every Thursday, you're here. Many of you have been doing the activity workbook. Some of you have been following up with us. We're all eagles. We're all eagles. But I have to tell you this, in order for to go to the next level, what you've been doing will not get you to the next level. We need to have synergy. We need to work with others. We need to do what we do the best and be able to delegate, right? Are y'all with me? Be able to delegate to others to do the rest. And so that's what we look at. You can look at us as almost like your, your wealth strategist, right? Advisor, right? You know, and we're not even paid, okay? So, I mean, I just wanted to share that with you because I think that's very important. And so, look, I see that, Karen said, yeah, me too. All right. So, yeah, not really fully covered. So please send an email right now. You know, there's nothing like action. I get it. Once we get off this call, we got other things going on. Send an email to info@therealmoneycoach.com right now. Action is the key. And you can feel my passion because I've spoken all over the world. And I come to, you know, people get rah, they get motivated. But what happens next? That to me is powerful. Tangela said, need help in all the areas. And you are nailing the topics that need to be addressed to improve coverage and protection. Thank you, Tangela. Right? Because again, I'm speaking from the heart. This is off script. One thing about Tony and I, we speak with passion because you can feel our sincerity. So thank you, Tangela. Peter and Maureen said, thank you. Information is priceless. Many people are in denial that these things can and will happen. So true. When my brother Sean died, February 2009, I couldn't believe it. 7 months later, my brother Greg, 8 years younger than me, died. And then Thanksgiving week, my best friend, my mentor, Bill Davis, died. This is all within 2009, all unexpected. And that's why I go back to this. This thing, I have this in my bedroom because I want to see it every day. One of three things are going to happen to me. One of three things are going to happen to each one of you. Die too soon, become ill, or live too long. And what I'm saying is, unless you've got a plan for all three of these, then we're not prepared. They say 7 P's. Prior proper planning prevents pitifully poor performance. Yeah, it's a tongue twister, but it's real. And so again, I want to say thank you for this. Kathleen said probably. Okay. Shay says assessment is definitely ongoing because needs change. I need to update my will. Thank you. Right? I mean, this is real talk, right? Jennifer said, I'm covered, but am interested in having about other opportunities, talking about other opportunities. Thank you. And San said, yes. So again, send an email to us, right? And because again, you can see, I'm just very passionate. I'm very direct because I'm saying, you know what? Enough is enough. When Tony and I, our friend, Dr. Dennis Kimbrough, author of Think and Grow Rich, A Black Choice, shared that statistic, I was saddened. 37% of small businesses are not returning. They're gone because of COVID-19. That's alarming. And so now you can feel, I mean, we just heard this last Saturday. That's why I'm bringing this passion right now. I know I've gone a few minutes over, but I want you to understand it's important. So in closing, right, because I could go on, and I see Tony giving me the like, let's cut it. And so I got to go ahead and get off. But I just want to say, please send us an email today, info@therealmoneycoach.com. Even if it's just to share, what did you enjoy? And if there's any questions that you have, if you don't even want to talk to us, we can respond via email, right? I mean, we just want to add value, right? Because my fear is that for the businesses, the Hub family, Hub Nation, that have come to these financial wellness for entrepreneur sessions, and for us to be, getting this information, the greatest thing is to know something and not do something, right? And so, for us, 4 weeks from now, 4 months from now, a business has gone through our program, but yet something happens because the winds are coming, the rains are coming, the storms are coming. But are you prepared? So having said that, thank you so much. This has been really phenomenal. Shay said, thanks, guys, for sharing great information and instigating action, because that's really what it's all about. At the end of the day, faith and fear can't operate at the same time. And what I really believe is that action is the name of the game. In closing, remember, a vision without action is just a dream. A lot of action without a vision is merely a passing of time. But a vision with action, that's right, can change the world. I am Marlon Smith in partnership with Tony Jackson and Chris Jackson. This has been another episode of The Real Money Coach. We will see you next Thursday, same bat time, same bat channel. And remember, there's greatness within you. Stay blessed.